One of the biggest challenges when you start investing is to understand where and how to start. There are so many mutual fund schemes. I think last that I saw, there are about 2,500 plus mutual fund schemes, hundreds of exchange traded funds, over 5,000 stocks. There are advisory services, there's PMS, AIF, the entire alphabet soup. On top of that, there are so many categories. There's large cap, mid cap, small cap, flexi cap, multi cap. You get the drift. Again, on top of that, you have other asset classes. So somebody says, you should have gold, you should have silver, you should have foreign equities, you should have bonds. The options are just way too many. So I've been keeping on getting requests from friends who are new to investing, who want to get started, and they're slightly afraid of getting directly into the stock market. So for them, the thought that I had was the best point, and this is what I've been suggesting everyone, all of my friends, family, is to start with a decent index fund. You could start with a Nifty 50 and a Nifty Next 50 kind of an index fund, or a Nifty 500 kind of an index fund, and keep doing an SIP on it, and that creates the bedrock of your investment portfolio. So I thought that for people who are starting off, or people who want a more diversified, conservative in the sense that it's not only equities or mid cap, small caps kind of equities that primarily I do, right? And also to ensure that we have a very simple way of doing it. So what I thought was the best way to look at this problem or to solve this problem is to create a basket of ETFs, where we create a single basket all in one, where an individual investor can get access to Indian and global equities, commodities like gold, silver, debt, bonds, liquid funds, sectoral funds when a particular sector is doing well, different strategy, multi-strategy funds like momentum, alpha, value, combination of these. Wherever there is an ETF presence, we can take advantage of that. And the benefit is that you get broad diversification even within equities. So we are not taking a single ETF. We are creating a basket of ETFs across multiple asset classes, which includes, like I said, foreign assets, commodities like gold, silver, and so on and so forth. This is a great way to get started, or to, even if you have been investing for a while, this is a great way to create a SIP based portfolio, which can become the bedrock of your overall equity exposure. Obviously, this portfolio will need to get rebalanced. It is not a buy, fill it, shut it, forget it kind of a formula, because we will have multiple ETFs. We will have to keep reevaluating it and updating the allocations from time to time, especially on sectoral funds, the debt to equity to gold ratio. These are things which we will dynamically keep reevaluating and rebalancing. Now, obviously, this is not risk-free. Primarily, it will largely be an equity-oriented portfolio, which means that it will carry the risk of uncertain equity returns. It will carry the risk of losses. At times, ETFs may be illiquid, and buying and selling may not be possible if you are trading in very large quantities, or if you intend to put in very large amounts of money. But in general, I have seen that this is going to work reasonably well for portfolios up to maybe 10 crores. Not all asset classes are available as ETFs in India today, right? And what we have also done is we've cut short our universe of ETFs to only those where there is fair amount of liquidity which is available, which means that you can buy and sell those ETFs when as part of the model portfolio. Other important point to remember is that although the portfolio is widely diversified across multiple asset classes, increasingly these days what we are seeing is that asset classes are behaving in a much more correlated manner. So all assets go up and come down in sync. Previously, when equities used to go up, gold used to fall, or when gold used to go up, equities used to fall. Nowadays, that correlation is not always holding true, right? So you always have to remember that most of these asset classes are getting more and more correlated. There's not exact correlation, but there is some amount of correlation. So there is a very distinct possibility of drawdowns, of losses when markets go down. So this is not a mechanism where there will be no losses or there will be very minimal drawdowns. There will be drawdowns, but the idea is to have a very large diversified basket so that we are confident. We are not taking stock specific bets. We are taking large market oriented bets, and we are taking bets where we diversify our portfolio across asset classes. The other thing, from a negative perspective that we need to remember is when the bull market is pending, right? When there's a large bull market in the stock market which is going on, any diversified portfolio will underperform the best performing asset class, right? So, for example, if say the small cap index has done phenomenally well, then everything else that you put money in will underperform that particular best performing asset class. The whole idea is not to get into what is the best performing, but to create a sort of an all-weather fund where we are comfortable doing, SIPs of 5,000, 8,000, 10,000 rupees a month. I have created this part of the this service. It is going to be available both in the Intelsense small case. It will also be available as a email-based service from our website. Do check it out and let me know if you have any comments and thoughts. Thank you.